Guys, stocks continue just to move slowly to the upside, but beneath the surface, the breadth is improving again. Low volatility is fueling a good, solid rotation into risk assets. So it's a really good bullish trend that we're getting right now. As always, I break it all down even more than this 5-minute video in our full market outlook video, about 30 minutes long. We take a look at everything in that, including our trade idea. So you can watch that at marketscholars.com using the link in the description, as well as the pinned comment down below. Let's start with small caps. The Russell 2000 again moves higher and outperformed large cap stocks, breaking back out of this little near-term decline we had, but even more importantly, breaking above the value area, above the 200-day moving average. The 8 and 17-day are above the 200-day moving average, and we're flirting now with getting above the value area here. At the same time, we're seeing a broadening of participation. The number of stocks above their 200-day moving average is continuing to move higher, now at its highest level. That's bringing the ratio of stocks above the 200 relative to above their 50 up to really strong levels above a rising moving average here. And look at the VIX dropping again today down to its lowest level since way back over here when this whole thing started. That tells us this move is happening in a good low volatility environment, potentially moving to a lower volatility regime. Of course, that would be very supportive of continued bullish momentum. So to sum up, small caps are leading, breadth is improving, volatility here remains in check. That is a healthy mix heading into earnings season. Again, as always, if you're finding this helpful, hit that like button down below, subscribe to our YouTube channel, hit that button bell on there so you know that when tomorrow's video is posted, and share this video with anybody else that you feel like would benefit. That helps us, again, get our message out to everybody here. So now let's dig into kind of some broader themes driving today's action and what that might mean going forward. So what's really driving this move under the surface? Let's break down today's key rotation theme and how the markets respond to that. And first, we'll take, again, another look at the Russell 2000. And you can see, again, the strong, I flipped the chart from the Russell to the Qs instead of the other way around. And you can see the nice little breakout to the upside that the Russell's having. Again, breaking the ratio of this relative strength chart, breaking above the 50-day moving average, working its way up here to the 200-day moving average. This is setting ourselves, now typically this is negatively correlated with equities, with risk appetite, but you can see even that negative correlation is starting to weaken. Now let's check out the commodity group. In particular, we're going to look at these three right here. Silver, which you can see jumping up so far tonight, getting an overbought cluster, but nice little breakout here on silver. Bitcoin did surge to all-time highs today, got a new overbought cluster as well. And of course, the copper here continuing its breakout. So still trading in the shadow, the long upper shadow of that post-tariff announcement breakout that it's having. Finally, breadth is improving pretty meaningfully here. As you can see, the number of stocks advancing in the New York Stock Exchange is near 1,000 here relative to the number of stocks declining. So you can see the 20-day average behind it is pretty steady. We're above it, and it's pretty steady at decently high levels. So again, still reflecting after a brief little pause in breadth down here, still reflecting some pretty good breadth across the board, and you can see that as well. Not just in the actual advancers versus decliners, but also in like advancing volume relative to declining volume, almost 2-to-1 advancing volume relative to declining volume there, with quite a few new highs, with over 100 stocks here hitting new highs in the New York Stock Exchange. So this confirms that the rally is broadening. It's not just a mega cap tech-driven story. With this kind of rotation, improved participation, it's critical to be more selective with your trades. As we do with the market outlook, we do a trade every day, and we've been pretty selective in terms of what industries, including today's industry. In fact, the stock that we did today on our trade idea came from the best performing sector on the day. So and in the market outlook video, full version of the video, I walk through all of this in a lot more detail. There was a few red flags that popped up. I break that down. We take a look at these ratios, a few other ratios, a lot of our technical charts to see what signals they're telling us about the strength of this trend. How close are we, if we are close to starting to weaken or soften a little bit. We break all that down along with our featured trade setup as well in that full market outlook video. Again, available at marketscholars.com. It is available for all of our subscribers, starting with our Market Outlook Foundation members. Again, for only $29 a month, you get access to that as well as a full 30-minute video and the Market Outlook Live, where we put on the trade before the market closes and manage all the old Market Outlook trades, which have been doing pretty well. I'll go over that in a lot more detail in tomorrow's Market Outlook video. So again, thank you very much for watching. I appreciate your time as always. Remember to subscribe, like, and comment down below. Share the video, share the Market Outlook blog post with others. Like us and follow us on all the social media channels, Twitter, Facebook, all of that. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.